welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra, and on this show, we get you an update on how the markets have been trading in the first half of the trading session, and also to help you understand how should the investors trade now amidst this high volatility that we have been witnessing in the markets. Joining in today is a very special guest, Mr. Gaurav from CapitalVia Global, joins in to share with us his key insights on how he is approaching the markets currently. Good afternoon, Gaurav. Thank you very much for joining in. Tell me, how are you looking at these volatile moves in the markets with respect to and in the backdrop of the rising COVID-19 cases on the one hand? Of course, the negative cues are actually coming in from the domestic markets. Globally, we have been seeing that the markets are touching record highs. And amid all of this, how should investors really read into the markets?
Hi, first of all, good afternoon. And today is the last session of the week. We are still seeing good consolidation, which is really good in the times of volatility. So we have seen last 3 days in this particular week, there has been a lot of volatility on the upside and downside. On Monday, we saw India VIX rising by almost around 18 odd percentage. Market falling almost 400 points and Bank Nifty almost falling 2,000 points. We saw some recovery. And then yesterday was weekly expiry. We saw a lot of volatility there as well. But today, I think it is good that markets are consolidating, which is a good indicator. However, still, I think, there are two prime key factors which are going to drive the market. One, obviously, is going to be the results which have started coming in. We saw some IT biggies announcing results. So markets would definitely watch out for results. And the second, obviously, is the spread of COVID. How is that government is able to control the same? So some respite on that particular aspect came on Tuesday. I think Monday, just before the market closed, wherein the government has kind of provided emergency approval to the Russian Sputnik vaccine. So I think, I think these two things are going to be the key. As you said, also that globally the cues are very good. Dow is making new highs every single day, and the markets are trading there at the highest level. So globally, I think the situation is, positive with respect to the market. However, because of the local sentiments, markets are hugely volatile, and there is a situation which is which was a panic situation, hugely, for last 3 days, and today, slowly we are seeing that markets are taking up. Forming a support and taking a base at 14,600 levels, and Bank Nifty is taking a support at 32,000 levels.
Right. So nevertheless, we are seeing some bit of consolidation, which you said is a positive sign. But do you foresee some more volatile moves to actually keep on happening in the days to follow, in the weeks to follow as well, keeping in mind that the situation around COVID-19 is still quite uncertain? On an everyday basis, we are seeing increase in the numbers as well, and fresh new restrictions being also imposed in several parts of the country as well. Every day we see some or the new information on this respect as well. So do you foresee any further downticks in the market? And if at all, yes, then how should markets and investors should really, move around it? Or should one be still focused with the earnings aspect and move forward with the kind of expectations like we have, just like how you pointed out for the IT sector?
So I think from the results perspective, definitely market is actually expecting a lot of good results to come out. We saw the expectation, was very high from pieces like TCS and NIFTY, and then even when they announced some good result, which was not in line with, just falling short of the street expectations, there was some pressure on those stocks. So definitely market is expecting really good results this quarter, because last quarter we saw economy, the GDP growth turning positive. So this is a quarter wherein people are expecting the companies to show very healthy numbers. But yes, on the other hand, COVID cases, one thing is largely clear, that the government is also now not in favor of complete shutdown of activities. Now the focus is to contain the spread, but at the same point in time, how to ensure that the economic activities continue going further. So I think both these things taken together, I think key driver for the market would be earnings. From COVID cases, I think most of the uncertainty and impact has been incorporated in the market. So earning, I think, going ahead would be a major driver for the market to decide the direction. And we would see stock-specific and sector-specific activities as and when the results are announced.
So, which sectors are you preferring at the moment? We are seeing, as for today, movement is there in the IT space. Metals are shining bright again. Of course, the pharma counters keep on moving ahead with the second wave because those are the companies that will benefit from the second wave. Maybe lab companies, hospital companies. Are you looking at those companies and these particular sectors, or are you taking a contrarian move, still staying with the banks and all those economy-related sectors?
So I think yes, at this point in time, it makes a lot of sense to pick defensive bets like pharma and FMCG, and reduce some of the exposure to banking stocks because any which ways, I mean, if small and medium enterprises are impacted, there would be certain pressure on the banking and financial services stocks which would come in. So definitely at this point in time, the safer bet would be to opt for defensives like pharma and
Okay.
FMCG, and then reduce some of the exposure to the banking and financial services stocks.
Okay, let's move on to understanding which are your stock recommendations that you're asking all the viewers and investors, your clients also to put their money in. Which stocks do you think will have good potential upside from here on in the current levels?
So I think this is the right time to pick, very good stocks which should be on investors' radar for a long time. So first pick from our perspective is DMart, which is Avenue Supermarkets. So as we discussed, FMCG stocks are the stocks which are going to continue doing well, even if there is lockdown, because there is always going to be a demand for them, especially DMart. I think in this particular space, it has shown tremendous potential. Other players in this particular market, like Future Group, etc., are facing a lot of pressure from various fronts, while DMart is continuously expanding its stores as well as driving per store sales as well. So I think it is a very good stock for anybody to hold for a long term. We expect around 25% upside with a target price of 3,700 in next 12 to 18 odd months. And this is a stock which any investor can choose in current situation, looking at a lot of volatility, and this could be a very defensive bet.
Actually seen from the current levels, and 3,700 is kind of target that you can really expect, as what Gaurav has suggested, over the next 12 to 18 months. For the long-term investors, this could be a very good bet. The second company that you would want to recommend, which one would that be, Gaurav, and from which sector are you picking up that?
So second company is a monopoly of its kind, which is CDSL.
Okay.
This year, what we have seen is that more than 1 crore demat accounts has been opened, and still, I think in total, the total demat accounts in India is at around 5 crores, which is close to 3.5% penetration, which is very, very low if we compare to mature markets like US or European markets or China. So I think from that perspective, India has got a lot of potential. More and more people would move towards equity as an asset class. Since the rates for fixed instruments are going to go down in future as well. So there is a lot of potential for this particular company as it is a monopoly of its kind. So I think it's a good stock to invest in. And currently it is trading at around 720 levels. We expect it to touch around 940 levels in another 12 to 18 months. So this could be a good stock to invest in the long term.
Okay, so CDSL again, strong upside can be expected, upwards of 900 rupees kind of targets are expected by Gaurav over here. So all those people who are bullish on the markets and the sentiments that are going to be in the markets and equities as an asset class, they could definitely look at adding this to their portfolio as well. Which one would be your last stock recommendation for the day, Gaurav, and from which sector have you picked up that?
Yeah, so the last company that we are recommending is the LNT. It is the uh, it is a major player in the core sector. We have seen the India government putting a lot of focus on infrastructure as a sector, and for recovery as well. I mean, for growth recovery as well, government is focusing on infra as a sector because it has ripple effects on a lot of other sectors. LNT being a major player with a lot of experience and a lot of good order book in place, I think it has good potential to show good upside from here. It is trading at around 1400 levels, and we see a level of 1650 coming in next 12 to 18 months. So this is also a stock which investors should definitely invest in if they're looking for long term.
Okay, so infrastructure space, priority space, if anyone is looking to add good quality names, L&T has been a good performer as well in the past. We've seen it has given very good returns in this kind of bullish rally that we've seen for the market so far. Further upside can be expected over the next 12 to 18 months as well, and you can definitely look at this name in your portfolio as well. However, to speak to your own advisor before taking the weeks as well. Thank you very much, Gaurav, for speaking to us and sharing your views on the market outlook and the stock recommendations that we've shared today. It's a pleasure to speaking to you today as well. Moving on,
Thank you.
let's see how the markets are really performing at this hour. You can clearly see that the choppiness has actually increased for the markets, but the benchmark indices are trying to hold on to the gains that are being witnessed in the markets, be it for the Sensex and for the Nifty. They are trying to climb up above the crucial support levels and the resistance levels. But right now, if you see, about 78 points of a change on the upside can be seen for the Sensex, 48,881. That's the level at which the Sensex is trading, with mild positive gains of 0.16%. For the Nifty 50 again, 54 points of an addition right now. So more consolidation, range bound trade, however, amidst this choppiness is what we can see today. 0.4% update for this index. 14,636, that's the level at which the Nifty rupee is also trading at. Where is the pressure building up? It's clearly in the banking space, and that too in the private banking space at that. And although minor losses, but 0.2% of a weakness over there. 32,048. That's the level at which the Nifty Bank is really trading at. And for sure, there is a kind of move towards holding that 32,000 mark on the Nifty Bank that we can clearly see. When you talk about the broader market indices, they are the ones that are outperforming the markets currently. 1.25% uptick for the mid cap and the small cap indices. There's an addition of clearly about 250 odd points for both these indices at the moment. Let's move on to see how the sectors are performing at this time. And you can clearly see from this index that there are only two pressure points that are building up at halftime for the markets, and they're actually coming in from the financial services space and from the private banking space that are trading just with mild losses. Other than that, sharp recovery, sharp rebound is actually being seen in several sectors like autos, that's up about 1.5% in trade. Metals are shining bright with 1.7, 2% uptick currently. IT sector also upwards of 1% movement is what we can see. PSU banks are also holding up in the green, but it's just the private banks that are losing some bit of momentum over there. The FMCG is also holding up with mild gains at the moment, and so is the pharma index and the energy space as well. Looking at the top Nifty 50 gainers at this point in time, you can clearly see that Wipro is still topping the charts and now is also gaining, extending the gains that it had garnered in the first half. It's now up over 9% in trade at 469, right after the stellar quarterly numbers that they have given. This stock is really shining bright. From the metal space, again, the winners that have been hogging the limelight, Hindalco still upwards of 6% is the kind of move that we can see. BPCL, M&M, and Ultratech Cement, these companies are holding on to the yields of about 3.5% in today's trading session. Moving on to the laggard space then, where is the pressure building up? It's clearly the banking and the financial majors that you will see finding themselves in the top 5 losers list of Nifty 50. ICICI Bank down about 1.4%, Bajaj Finance down almost 0.8%, Hindustan Unilever from the FMCG space also now supporting the markets, currently down about 0.7%. Axis Bank and TCS is now again finding itself booking some kind of profits after reversing the kind of losses that it had right after the earnings. So 0.87% downtick for this one as well. And with that, we wrap up this edition and we'll keep giving you all the updates of how the markets are trading, the moves that experts are really expecting on the markets, and from the personal finance space also, all the news is awaiting you. So stay tuned and stay logged on to Money9.com.